earnings seasons are coming out, and today in this video I just want to share with you in my portfolio how I'm thinking of trying to reduce my risk and increase my reward. That's the whole point of making a portfolio. That's the whole point of managing your own portfolio in 2020. So stick with me on this video. I'm going to share with you my views, and hopefully that inspires you and also motivates you to do action on what to do on your portfolio. See you soon. See ya. Good morning, it's a Sunday today and I'm sitting outside my hotel. If you can see, it's a very nice day, and thought I'll share something for the Sunday morning to everybody on my YouTube channel. As you know, the earnings season for Q3 2020 for US and UK stocks will be releasing soon. So it's been a really exciting month, and also coming in with the election is going to make the volatility, is going to give a bit more volatility in the stock market, as you can see. So yesterday I had a bit of a time to sit and think and relax as well over a drink of wine to see what actions I'll be taking and my thoughts on how I need to reduce my risk and also maximize my reward. I think that's a very important aspect of managing your own self-portfolio. What are you guys doing? Wow! You make your own pom-poms with the leaves.
Yeah, I got 34.
Well done.
I got 42.
Okay.
42.
So for the first batch of stocks, the FANG stocks, the big mega cap stocks like the Apples, Amazons, Nvidia that I hold, I'm not selling any of those. The only one that I will take the shavings off the table will be Adobe. I have to take something off the price. So Adobe is quite generous just now. I did do a bit of selling for Adobe. I'm going to sell the remainder of my Adobe. I think the earnings will be great, but I just have to take profits so that I get enough cash through the volatility period or opportunistic period into this earnings season, and also election period. So Adobe, I'm taking profits. I'm holding Apple, I'm holding Amazon, Tesla, and my Nvidia stocks still. So this is me for the mega big cap stocks. So the first stock that I'm thinking of selling, take profit to reduce my risk and take more reward, will be Etsy. So Etsy e-commerce, when they were 109, 110, even when they fell below, I was averaging as low as I can. They were great value. But now they're sitting 150, really short, really quick. There was a bit of cup and handle technicals to be seen. I personally am taking profits off the table. I'm selling all my Etsy on both my accounts, my Trading 212 account and also my personal FE portfolio account. I'm taking profits because I'm hoping for the dip. I think there'll be more majority of a dip because I cannot see any growth from that on until the earnings tells me they're making money from other avenues besides mask or furniture equipment. So I need to see what the earnings tell me, but for now I'm taking profits off the table. So the first one there's two stocks that I want to speak about that I'm actually buying before the earnings, and the first one will be Fastly. Fastly is a company that's dropped in the stock price by 30%, and I think there's still room for drop up to at least $80 from the highs of like 120s, 130s. So I think it's an opportunity for Fastly despite the short-term effect of the TikTok saga, meaning they're losing sales revenue, which impacts the net profit. So Fastly is something that I'm buying before the earnings when they drop to 80. And the second one that I really like that I'm buying before the earnings, which I see great potential, more reward than risk fall, would be Upwork. So Upwork is a company that's doing freelancing. I'm very bullish about it. I'm more bullish about it than FIVERR because FIVERR shot so high. And Upwork I'm buying. I'm hoping to buy more Upwork before the earnings, and hoping the earnings will be explosive for me to boost my rewards, from it to break the ceilings beyond the 24s and 30s. I'm having high hopes for Upwork. I'm having high hopes for the rise in freelance, the rise in sellers, the rise in company hiring people to do freelancing work. And now, everybody's got their own dilemma. I've got a dilemma between three stocks, which I should be buying before earnings, or I'm not very sure about what the earnings would be. It would be number one, Pinterest, FIVERR, and Uber, my three first favorite hypergrowth stocks from 2019. So I'm not sure whether I should be taking profits off them now, or should I be buying before earnings, or should I be buying after? So these are the three stocks I'm in great dilemma, three stocks which I believe. Number one, for Uber. Uber is, I'm just concerned about when if Biden eventually wins the election, and with the act of freelancing, it might be an impact for them. Same goes for FIVERR. So what's going to happen to the sellers in FIVERR if the freelance economy that Biden comes in will have a negative impact? So and the fact that FIVERR is also feel overvalued, they're not showing until the earnings. If they show the explosive growth of another 100 or 200% growth, then they can sustain the $180 mark. But for now, FIVERR, I need to see them after the earnings. And for Pinterest is an interesting one. They're doing really well with growth, but how much more room for growth will they do in this quarter? So, should I be taking profits, or should I be buying after if they do the dip? Because I still think it's a great company in the long term. So, things like that give me a dilemma. And the fact that we don't have much data, these three companies are not showing much data on their movement, on their pre-earnings. They're not giving us any hints. So it could be explosive, it could be stagnant, or it could just drastically drop, and then that could be trouble. And they'll be looming on your risk, your risk that you did not take profits before. So these three are the ones in dilemma. I'm still thinking. I still got a week to decide before I sell or buy, or just buy in cash on a weakness. So there's three dilemmas. I'm sure you have your own dilemmas in your stocks as well. It's something they sit and think, and they just have to analyze. Hopefully, if I do find anything else, I'll just share as much as I can. There's two stocks that I would like to share that is responsible for a lot of other cascading stocks. One, Twilio. Twilio has hinted about their really good estimate earnings. They actually raised the earnings just before the earnings next week. So Twilio is responsible for staying at home economy, staying at home stocks that you're staying at home, you are changing your life, the way you work, the way you shop, the way you do your transportation, the way you travel. So Twilio with the chatbots indicates that if their clients grow, if the revenue for Twilio grows, that means the clients' revenue are growing as well. So you should watch out for the stocks that Twilio, or the customers that Twilio deal with. And if you own that stocks and if Twilio is growing, great, hold them. Second one would be Zoom. Zoom is working at home stocks. Working at home stocks are like the cloud computing, the likes of database that people use online, tools that you use every day for your work. People are working at home, people are not going to the offices, we're saving on carbon footprint. So if Zoom is growing in user base, meaning that companies are starting to move into more and accepting people working from home. So if you own Zoom, you need to watch out who are the companies are dealing with Zoom. Because if Zoom is growing, every other stocks that's working from home, it's still growing. Companies are sending people back home to work. Companies are accepting you working part-time at home and also part-time work, saving you on fuel, saving you on time and more time with the family. So these two companies' earnings is you have to watch. And if you own stocks that are related to Zoom, working from home, or Twilio, stay-at-home stocks, you are locking in a lot of growth profit. So this is me on my video today on a Sunday morning, thinking about what I should do before pre-earnings and post-earnings and after earnings. Something that you should do for your portfolio as well. Look at individual of your stocks that you own. Work out the risk and reward. How much upside and how much downside. Sometimes we don't have enough technical data to work on many things. Sometimes we have to work on the fundamentals. So hopefully you enjoyed this video. I'll be sharing more pre-earnings and post-earnings in the coming weeks to come, because this is the most exciting time just before Christmas, and because this will bring the momentum for the company towards Christmas earnings, towards the next Q1, and this is the time to catch your stocks before they sprout after Christmas. Alright guys, have a good time. I'll be joined by my family, and you guys have a good time on your final part of the weekend. Take care, bye.